Thank you for joining us for the seventh webinar on the series presented by Canadian Construction Association on navigating COVID-19, financing programs and financial recovery cash flow considerations for construction. My name is Kenny Leon with the Canadian Construction Association. Before we begin, just a webinar etiquette or a request. For questions, please use the question box in your GoToWebinar panel. You can ask them right throughout the presentation, and we will answer them at the end of the presentation. So at the end of the presentation, we have a Q&A. But please ask the questions right throughout, and we will answer them accordingly. Today's webinar is presented by BDO Canada and sponsored by Boxtel Construction, a long-standing member of Canadian Construction Association. On the call today, we have John Boxtel, President, Boxtel Construction, and immediate past chair of Canadian Construction Association. Over to you, John, to introduce our presenters.
Thank you, Kenny. My pleasure. I'm talking to you all from sunny Winnipeg with clear blue skies. As Kenny mentioned, I'm John Boxtel. I'm President and CEO of Boxtel Construction, and I am the immediate past chair of the Canadian Construction Association and a corporate member. Boxtel Construction has been Manitoba's construction company of choice for nearly 100 years, and we pride ourselves on world-class innovation and a client-first approach to doing business. COVID-19 has affected construction across the country, and business owners like me are now forced to balance ongoing operations, increased on-site health and safety standards, and plan for cash flow to ensure we are shovel-ready when it's time to focus on economic recovery. To sustain our workforce and sustain our businesses, we must navigate the different financial programs and benefits put forth by the federal government. This is no easy feat. It can be challenging to manage and understand exactly what benefits are available and how to access new options that are added weekly to the program, on top of the already demanding priorities in running your business. Today's discussion will be a welcome support for business owners like me who want to better understand the benefits and financing options under the COVID-19 Emergency Response Plan and financial cash flow considerations for business continuity. As we know, cash is king, and cash flow is all the more important in a finance-heavy business like construction. Boxtel Construction is happy to sponsor this webinar presented by BDO Canada so that all construction companies in each sector and of all sizes across the country have the information they need to sustain and manage their business through the COVID-19 pandemic. So joining us on the webinar today, we have from the team of BDO Canada, we have Justin Mastrangelo, Partner, Real Estate and Construction Tax Practice. We have Amanda Favot, Partner, Financial Advisory Practice. We have Hali Van Vliet, Vice President, People Advisory, and Jennifer Lucier, Senior Manager, Real Estate and Construction Tax Practice. So I'd now like to turn it over to Justin to lead the webinar. Thank you.
John, Kenny, thank you very much on behalf of myself, Hali, Amanda, and Jen here at BDO. We'd just like to thank you both at Boxtel Construction and at the association for having us today to present on this webinar some very, very relevant topics. What we're going to go through today, we're going to talk a bit about the wage subsidy. Hali will talk and speak to some of the benefits and programs available with the workforce government support. Amanda will speak to some of the financing options available that are pretty critical if you haven't seen them yet in terms of looking forward to your cash flow projections. And then Jennifer will speak to the tax deadline extensions and some other creative ways to help out with your cash flow. I'm going to get things started today by talking through the emergency wage subsidy. We want to take a little bit different approach today to the wage subsidy, and we want to take a little bit more of an in-depth look at the subsidy and a lot of the issues that we're finding with the subsidy. I'm sure you're probably well aware of a lot of the particulars around the subsidy. We want to dig deeper and let you know in terms of here are the errors that we see people making, and here are some opportunities from a strategic perspective to maximize the subsidy available for you and for your entity. I will start with a high-level overview of the program. To be eligible for the subsidy, you definitely have to be an eligible employer. There are kind of 4 key concepts that I'm going to speak to here. As an eligible employer, unlike the temporary wage subsidy, this emergency wage subsidy has been opened up really to just about any entity, right? So if you're a corporation, for many people on this call, very likely a corporation or very likely a partnership, both can be considered eligible entities. If you do have a partnership as your entity, you do want to pay a little bit more specific attention in terms of who are the partners of the partnership, as they also have to be considered eligible employers in order for you to apply for the subsidy. Eligible employees is a little bit more straightforward. It's just employees that were employed in Canada. The key caveat here, and I'm sure I'll mention it 2 or 3 times throughout these slides, is that eligible employees cannot be without remuneration for 14 or more consecutive days in any of the eligible periods. So I'll speak more to that with a few of the upcoming slides. We do get a lot of questions on eligible remuneration, and on that point, we will be saving some time, probably a good 15 or 20 minutes towards the end of the presentation, to help address some of your questions. And we do get a lot of questions on, hey, what is eligible remuneration? And generally, it's your salaries, wages. It can include bonuses, commissions, taxable benefits. It can include vacation pay. It can include sick pay. So these are some of the things that qualify as eligible remuneration. Think of it this way: as generally, anytime you're required to deduct source deductions, that generally qualifies as eligible remuneration. You want to be careful in some instances with stock options. Things like that are not considered eligible remuneration, but for the most part, your general salaries and wages are considered eligible remuneration. In the construction industry, qualified revenues, I think, probably becomes the area where we see the most questions. So I'm going to read you a little excerpt here on this. Qualified revenue of an eligible employer means the inflow of cash, receivables, or other consideration arising in the course of its ordinary activities in Canada in a particular period. So these inflows are generally from the sale of goods, the rendering of services, and the use by others of eligible employers' resources. A couple of things that are excluded from your calculation of qualified revenues are other non-arm's length revenues. Those have to be excluded. You're also to exclude extraordinary items and amounts on account of capital. I can imagine how complicated this gets looking at some of the applications we've helped with thus far in terms of the nature of your industry. We're dealing with holdbacks, percentage of completion, and progress of jobs. Really what you want to be very careful of here is following your normal accounting method when looking at your qualified revenues. Spend a little bit of time talking about the program in general. Again, there are 3 claiming periods. The first claiming period was for wages earned between March 15th and April 11th. The second period, April 12th to May 9th. And the third period, May 10th to June 6th. In order to qualify for the first period, you had to demonstrate a 15% decline in your qualified revenues. If you qualified for period 1, you automatically qualified for period 2. If you did not qualify for period 1, you can still qualify for period 2 if you show a 30% decline in your qualified revenues for that period. The same would apply for period 3. Now, in terms of the reference period for eligibility, for period 1, you're looking always at your March 2020 revenues. Again, in your calculation of qualified revenues, very important in the construction industry, you can make an election on the application form to calculate your revenues using the cash method as opposed to the accrual method. That should be something critical that you may want to take away from this presentation. You may not have qualified for the subsidy using the accrual method, but if you look at your revenues using the cash method, you may be eligible for the subsidy. Very, very important as you look ahead in terms of what your cash flows will look like over the next few months of 2020. Again, to qualify for period 1, you've got to show a 15% decline in your qualified revenues, either compared to March 2019, or you also have the choice to compare it to the average of January and February 2020. So you have a few choices here, and I want to encourage everybody on the call, if you haven't already done so, become very familiar with these choices and become very familiar with the calculation of the subsidy, because they can be critical in terms of maximizing the amount that you're eligible to receive from the government. I want to spend a bit of time on the application process. The application process has been open now, I think, since April 27th. There's 3 ways that you can apply. You can apply through your My Business Account portal. You can apply through Represent a Client. So, what we're doing in a lot of cases is we are filing the application form on behalf of a lot of our clients because they either aren't properly registered under the My Business Account or they just want some assistance in filing the application. A third way, if you don't have the My Business Account set up, you can also apply through CRA's online web forum using a web access code. And there's a few steps there in terms of what you can do to apply for a web access code if you do not already have them. Here's some of the information. You're going to need to show the number of employees for that period, total eligible remuneration paid during the period. You're going to need to show your calculation for the wage subsidy. Now, you do not have to submit that, but we recommend that you keep that on file. If you're eligible for the EI or CPP top-up, if you're eligible for that top-up, you're going to have to input that data. Companies that are eligible for the 10% wage subsidy, whether or not you claimed it or not, this is a key point, whether or not you claimed the 10% wage subsidy or not, if you were eligible, you have to reduce the emergency wage subsidy claim by the amount that you were eligible. Very, very common mistake that we are finding that people are making. Again, if you receive any of the benefits that Hali will speak to briefly for the work sharing program, you also have to indicate those as they also reduce your wage subsidy. And then your wage subsidy is calculated, you apply online. For each time that you file an application, you have to keep a signed attestation form with your records, along with any of the elections that you make throughout the process. I want to spend some time now looking at some of the frequently asked questions that we're getting for this subsidy. First one, can an eligible employer claim the wage subsidy for an employee that the employer hires back and pays retroactively? The answer to that is yes. In a lot of cases, we found that employees were laid off sometime during the first 2 weeks of period 1. Because of this, they were without remuneration for 14 or more consecutive days in that period, and therefore not eligible for the wage subsidy. The government has clarified that you are able to retroactively hire an employee, pay them their wages for that period, and then claim the wage subsidy. The one point you have to be careful of here is that if you do this, that employee very likely has to repay the CERB benefit that Hali will speak to if they've already applied for the CERB. So a few interesting points there. When calculating the wage subsidy, should I consider wages paid or wages paid in respect of that week? This is the area where I think I find the most errors in subsidy applications. A lot of people are under the notion or understanding that this is based on, hey, when did I pay the wages? That's when I'm claiming the wage subsidy for. That is incorrect. The wage subsidy should be calculated based on when the wages were specifically earned by that employee. This can get very, very specific. The government has added a few very good examples on their website, but what this means is your pay period, your biweekly pay periods, or your ADP, Ceridian, Payworks, whatever the case may be, very unlikely that it lines up with the emergency wage subsidy application periods. You're very likely going to have to do a little bit of math on your part to say, what are the eligible wages for that period? So in addition to having to be earned, the wages also have to be paid in order to claim the wage subsidy. So you have to meet both. Biggest area where people are making some errors on their application forms that can be very costly if they're not aware of them. Can an eligible employer claim CEWS in respect of an eligible employee who has received benefits under the CERB? Common question, and the technical answer is yes. You got to be very careful here because if you are an employee receiving the CERB, they can only receive up to $1,000, and Hali will speak to this a bit more, $1,000 in any of the 4-week periods that they receive the CERB. So it is possible in very unique situations that you can apply for the emergency wage subsidy for an employee who also has received the CERB. What is baseline remuneration? Baseline remuneration is a function of the calculation of how much of a wage subsidy you're entitled to. It's the average weekly earnings of an employee from January 1st to March 15th, excluding any 7-day periods where that employee did not work. So you want to be very cognizant of that formula. Will I be eligible for both the CEWS and the 10% wage subsidy. Again, you can be eligible for both, but you're never going to receive the benefit of both. Again, if you were eligible for the 10% subsidy, you have to reduce your emergency wage subsidy claim by that amount. Number 6, can owners and non-arm's length employees claim the wage subsidy? Short answer is yes. Owners and non-arm's length employees can claim the wage subsidy. What the government tried to do here, though, is they did not want owners hiring family members after this situation took place to benefit from the wage subsidy. So if you are a non-arm's length employee, you can only claim the wage subsidy if you had any baseline remuneration, i.e. wages between January 1st and March 15th. Common question we get there is, what if I was an owner that received dividends during that period? Well, out of luck, you do not qualify for the wage subsidy in that case. Can I claim the wage subsidy twice if an eligible employee is employed by 2 or more eligible employers? Again, short answer is no. If you employ somebody in 2 of your entities in a related group, you can only claim the wage subsidy once for that specific employee if it's part of a related group. And again, number 8, is the wage subsidy considered taxable income? And yes, the wage subsidy is included taxable income. I want to spend some time on 3 quick elections before I give you an example of what the Excel looks like for the wage subsidy. 3 examples we're going to look at, and I find that many people are not aware of these elections and the ability that they have in terms of calculating revenues to qualify for the wage subsidy. So this specific election is for companies that normally prepare consolidated financial statements. The way the legislation reads is that if you normally prepare consolidated financial statements, you have to file the wage subsidy on that basis. So in this case, look at Company A and Company B. Their aggregate revenues for March 2019 were $2 million. Their aggregate revenues for March 2020 were $1.8 million. On a consolidated basis, they're only down 10%. Too many times I've seen companies just stop right there and think that they're not eligible for the wage subsidy. You can make an election, as noted above on this slide, to calculate your wages, to calculate your qualified revenue decline on an individual entity basis. And in this case, if this company did that, you would see that Corporation B would qualify for period 1 because it had a 20% decline in their revenues. Very important there. The next example is kind of the opposite situation. In this situation, I've got a corporate group, so we've got Mr. A and Mrs. A, who each own shares, who each own shares in their individual entity. And in this case, if you look at Corporation A doesn't qualify for the wage subsidy because it did not see any decline in their revenues. Corporation B noticed a 50% decline in their qualified revenues. So again, far too many times I've seen just Corporation B apply for the subsidy when these corporations in this group probably aren't aware that they can file an election if they're members of an affiliated group, and in this case they are because they're husband and wife. On an affiliated group, you can calculate your revenues on a consolidated basis, and in this case, the consolidated revenue decline would be 25%. This would be an election you could file for Corporation A to qualify for the wage subsidy. Again, trying to put more, trying to find other ways for you to qualify for the subsidy that you might not be eligible for. Common question we get is around, commonly referred to sometimes as paymaster companies or payroll companies in a group of companies. So oftentimes payroll companies don't have a revenue decline because their only source of income is management fees from a related group. Well, if I have a payroll or paymaster company and they earn all or substantially all of their revenue from non-arm's length sources, and for income tax purposes, all or substantially all means 90% or more. So if I have an entity that earns all or substantially all, 90% or more of its revenue from non-arm's length sources, I can use an alternative method. I can make another election, use an alternative method to calculate my revenue decline for that period. And really what this example gets at, all 3 of these examples are on the CRA's website if you want to refer to them in more detail. But all this example gets at is you're effectively looking at a weighted average of the entire revenue decline for payroll company versus all of the companies that it charges management fees to. So you're kind of looking at a weighted average here. Again, common question we get on, hey, I've got a payroll company, they don't meet the revenue decline test. because it's non-arm's length revenue. As I mentioned before, you have to back out non-arm's length revenue from your calculation. So those are three very interesting examples that I think everybody should be aware of. Again, far too many times, as soon as this application process rolled out, I think there were something like 10,000 applications filed on that kind of first day. And I just think all those companies completely jumped the gun. I think there's very possible they made errors in their calculations. And what we're finding, especially for large groups, is much more prudent to take a strategic approach to this. Look at your revenue decline in period 1. Now that April's done, look at your revenue decline in period 2. Which of these elections do I want to make? How can I maximize my wage subsidy claim for my associated group? Because as of now, the government hasn't indicated any way that if you file incorrectly or if you want to make a change to the application, that you have the ability to do so. So when you file your application, you want to make sure that it's correct so you can maximize your claim. The final slide I want to speak to before passing it off to Hali is I want to just give you a brief overview of the CRA wage subsidy calculator. So if you aren't already aware, the government has an Excel calculator on their website. I'm strongly encouraging everybody to use this Excel calculator. I think it's a very, very good tool. You have to be aware of a couple anomalies on the spreadsheet that I think can cause errors in your wage subsidy applications. You have to be aware of them. If you look at the spreadsheet, there's a few tabs at the bottom. One of them is a batch tab, and then there's a 52-week tab and a bi-weekly tab. My recommendation is to use the 52-week tab. That's what this one is. Basically, you're calculating the wage subsidy on a week-by-week basis. I don't like the batch tab because the CRA has also indicated that you're going to have to indicate down the road when you're reporting on these employees' T4s how much each employee received for the wage subsidy in each of the eligible periods. So you're going to have to calculate this information on a per employee basis anyways. Strong recommendation to use this tab. If you look at this example, I've got a few examples noted here. First example is we're looking at a salaried employee making $78,000 a year. You've got to indicate, are they arm's length or non-arm's length? Most of these cases, we're looking at arm's length employees. Then you have to calculate that baseline remuneration. Again, as I mentioned, average weekly pay between January 1st and March 15th. In this case, $1,500. Simply put, this employee was continued to be paid and earn their wages for the first 4 weeks in period 1, $1,500 a week. The wage subsidy for this individual is $847 a week. Look at example 2, $52,000 a year, $1,000 in the baseline remuneration period. Again, this employee earned $1,000 a week for weeks 1 to 4. But again, if you look at this subsidy, you may ask, why is it not $847 and why is it only $750? Again, I would encourage you to really familiarize yourself with how the formula works for the wage subsidy. This is because the subsidy is a function of your baseline remuneration. In this case, 75% of the baseline remuneration was $750, and that's the cap for this employee. A couple key examples. When we look at somebody whose salary was reduced, we see this often where people are hired retroactively. So in this case, I had somebody earning $78,000 for the baseline period, or $1,500 a week, but I reduced their salary when the crisis started to $44,000, or $847 a week. Interestingly enough, why I highlighted this is because this is a situation where, if structured properly, you can actually receive a subsidy for 100% of the employee's wages. The government's noted that it's not mandatory to top up the wages for employees. The only other example I want to note here is the one that says an employee laid off in week 2. So if you fill in this spreadsheet properly, the employee earned $1,500 for the baseline remuneration period. The employee was paid $1,500 for week 1 and also earned $1,500 for week 2. If you just put zeros in week 3 and 4, because that's what the spreadsheet tells you to do, look at the final column for the claim. The claim is spitting out $1,694 for this specific employee. However, that's incorrect. This is the area we're seeing most incorrect on all of the applications that we're reviewing. This is because this employee was without remuneration earned for 14 or more consecutive days in period 1. Again, that's earned and not paid. So even if you use the CRA spreadsheet to fill out your application, put in the zeros in these columns, it still calculates a subsidy. That unfortunately, is incorrect. So that's all for now. I'm gonna pass things off to Hali to move things along, and hopefully we'll have a bit of time left for questions at the end of the hour. Thank you very much.
Thanks, Justin. As Justin mentioned, I'm going to talk about the Canada Emergency Response Benefit, or the CERB, give you a general overview of the program, although most of you probably know quite a bit about it. It's been out for a while, and also talk about some of the new aspects of the program that you may not know about. So this is the program that is available to Canadians who have lost their job, potentially still employed but not working or earning income, and I'll talk a little bit more about that. It could include those that are sick or quarantined. It includes someone that may be taking care of someone that is sick. And it also includes working parents who are at home taking care of children due to those daycare and or school closures. It is $2,000 per month for up to 16 weeks. And it not only covers wage earners, so employees, it also covers contract workers, those that are self-employed, and now they are also covering seasonal workers. So the portal has been up and running since April 6th, and it requires people to give their social insurance number, their personal information, and then they have to answer a few questions in order to see if they meet those eligibility requirements. This is a simple and easy way to access this program, and we're finding that people are receiving their benefits, so their payments, as early as 2 to 3 days if they're using the direct deposit option. The program is available from March 15th until October 3rd. And so we get a lot of questions from people asking, you know, how do I know if I'm going to be applying for those regular EI benefits or if I'm going to apply for the CERB, and do I have a choice? The answer to that question really depends on when you became eligible for employment insurance to begin with. So if you became eligible to receive benefits before March 15th and you applied and you are eligible for regular EI benefits, the regular EI rules would apply to you. If you became eligible on or after March 15th, you will be processed through the CERB. And it appears that all new applications will receive CERB benefits regardless if you would have been eligible to receive more under EI. Because the EI benefits is the 55% of your salary up to a maximum of $573 per week. So in essence, you may be losing that $73 per week if you would have been eligible. However, you are now being transitioned to the CERB automatically. A couple interesting points, and Justin made a couple of them as well. Workers do not have to be actually laid off officially to receive the CERB. They could be on furlough, or they can still be attached to their companies but not working or working less. Originally, you could not earn any income in order to qualify for the CERB, and of course we know that that now has changed. The rules are you can earn up to $1,000 for the period of at least 14 consecutive days in that initial 4-week period that you're applying for, and then it's $1,000 in total for each subsequent claim period. I want to now move on to something that's getting a lot of attention with the CERB, and this is the idea of returning or repaying the CERB benefit. And there's lots of questions on why you would actually do that. So obviously, if you no longer meet eligibility requirements for the benefit, you must repay it or return it. So there's 3 reasons why this might happen. As I mentioned before, it's very easy to access and a very quick get you payments. And we all know that as time went along, more information and details were released about these programs. So we learned more and more as the weeks went on. So for those that may have applied in the initial, March 15th and after period, they may realize now as more information was released that they may not have actually been eligible or actually met those requirements to receive the CERB. So that's the first reason why you might go on and say, well, now I need to repay it because now I see I actually wasn't eligible to begin with. Another reason why you might have to repay is that you may have received payment from both Service Canada and the CRA. So we know that this benefit is available in both options, so through Service Canada or through CRA. You may have received benefits through both. The other thing is, in that kind of crossover period where you might have applied on March 15th, you may have been in that transition period, and we're finding that some people were receiving double payments. So in that instance as well, you can go on and actually repay the benefit. Now, the last point is something Justin alluded to. So if you earned employment or self-employment income earlier than expected, the normal way that would happen is that your employer has called you back to work earlier than expected, or they have put you back onto the payroll, like Justin mentioned, retroactively, and now they're going to pay you for a period that you also received the CERB benefit for. So I'm going to give you a little example. Let's say you applied for the 4-week period of April 12th to May 9th. At the time you applied, of course, you didn't expect to have any income or little income for that 4-week period. But now you just found out your employer has rehired you and will give you back pay for that same 4-week period. So in this situation, you need to repay the CERB for the 4-week period of April 12th to May 9th. If you repay the CERB, the CRA won't be issuing you a T4 for that payment. So because of this, we need to make sure that those payments are repaid before December 31st, or that's what they're asking to do. That's just to ensure that the slips are not issued improperly. If, however, you can't pay that payment back before then, it's recommended that you need to contact the CRA and then work out some sort of payment option so that you'll be able to repay that CERB in installments or in some way, shape, or form. So that's all I have. Thank you.
Good afternoon, everyone. I hope everyone is staying healthy and safe during these times. I will actually be summarizing the government support programs for businesses under the BCAP, which is essentially the $65 billion program through EDC and BDC indirect and indirect lending. It's really meant to help provide funding to small, medium-sized enterprises to help cover operating costs and help with liquidity impacts during the COVID-19. So with that being said, I'm going to start with the CEBA, or the Canada Emergency Business Account. So the Government of Canada launched the Canada Emergency Business Account on March 27th. It has since been implemented by eligible financial institutions in cooperation with EDC. So if you go to the EDC website, you'll see a list of participating banks and credit unions. This is a $25 billion program providing interest-free loans of up to $40,000 to small businesses and not-for-profits, and is available online through your financial institution. Essentially, the loan parameters include the following: repaying the balance of the loan on or before December 31st, 2022 will result in loan forgiveness of up to 25% or $10,000 maximum. If you do not repay the 75% of the balance of the term loan on or before December 31st, 2022, the full loan balance and all the accrued and unpaid interest will be due and payable on December 31st, 2025. Interest will then accrue on the balance of the term loan at a rate of 5% per annum, and that's payable monthly on the last day of each month. For this particular loan, there are no personal guarantees that are required. In terms of eligibility criteria, the borrower must be a Canadian operating business in operation as of March 1st, 2020. It must have a federal tax registration number. It must also demonstrate total employment income paid in 2019 calendar year was between the amounts of 20,000 to 1.5 million Canadian dollars, and you will have to support this through a T4 summary of remuneration paid statement. You will have to also have a business checking or operating account with your lender, and it should have been opened on or prior to March 1st, 2020. And it's also important to note that this program, you can only apply to this loan through your primary financial institution, and it can't be done at multiple financial institutions. It can only be done through your primary institution. The funds must be used to pay non-deferrable operating expenses, including such items as payroll, rent, utilities, insurance, property taxes, and regularly scheduled debt service. It cannot be used to pay any payments or expenses such as prepayment, refinancing of existing indebtedness, payment of dividends, distributions, and increases in management compensation. So it's essentially only for operating costs. I'm now going to turn my attention to the BCAP program and BDC. So in this section, I will be covering working capital loans that are available directly to companies by BDC. The loan parameters include the following. So amounts can range between $100,000 to $2 million. The interest rate is set at 2.8%, which is essentially BDC's floating rate less 1.75%. The term is a 36-month term. The first 12 months are principal postponements. That means you're only going to be paying interest on those 12 months. And the following 24 months will be a combination of the interest and principal. And BDC can structure the repayment to be 40% of the loan principal during the 24 months, with a last payment or a balloon payment of the remaining 60% of the loan principal due at the last payment. BDC will be taking second position if there's an existing debt, and a personal guarantee is required for this particular loan. So in order to qualify, standard BDC rules will apply and due diligence will be applied by BDC. The activities that would not qualify for these loans include refinancing existing debt, change of ownership transactions, or pre-revenue companies. So now I'm just going to talk to some of the BDC requirements that are included. And this would include cash flow projections for a period of 6 to 12 months, demonstrating a base case scenario as well as a COVID-19 case. You would have to also submit the last 3 years accountant prepared year-end financial statements for the business, including any related companies, for example, any other holding companies that may exist, and as well as the most recent interim financial statements if the year end is more than 3 months old, with comparisons to the previous year's interim financial statements. An application of financing is required, as well as a statement of personal affairs and a capitalization table with the ownership percentages and dollar amounts of invested per investor. So now the last 2 programs that I'm going to be discussing are essentially the guarantee on loans and the co-lending program. This is also done under the BCAP, and it's 20 billion of potential lending for each of these programs. And the purpose is essentially to provide credit and cash flow term loans to small and medium-sized enterprises. It's for all Canadian businesses in all sectors that were otherwise financially viable and revenue generating prior to the COVID-19 situation. The loan guarantee program allows financial institutions to issue operating credit and cash flow loans of up to $6.25 million to existing clients, with 80% of this guaranteed by EDC. The money is to be used for operational expenses, and the program is now available at various financial institutions and credit unions. Essentially, to start the process, you would have to contact your account manager at your financial institution, and they will in most cases ask for projections for the next 6 months along with financial statements. And in most cases, there will also be a link that is sent to the company which will need to be filled out. For the co-lending program, this is essentially another $20 billion program similar to that of EDC, and it's this one is done through BDC. And so eligible businesses may obtain incremental credit amounts of up to $6.25 million. BDC's portion of this program is up to $5 million maximum per loan. Eligible financial institutions will conduct the underwriting and manage the interface with their customers. And the program is actually designed in 3 different segments to target support to different business sizes. So for businesses with revenues of less than 1 million, you can access loans of up to approximately 312,000. For businesses of revenues between 1 million and 50 million, you could access loans of up to approximately 3.1 million. And for any businesses that have revenues in excess of 50 million, you may be able to access loans of up to 6.25 million, which is the max. These are also now made available by financial institutions. And again, companies will need to contact their banks or credit unions. I think it's really just important here to reiterate what likely most of you had heard previously. And it's basically that you have to look at your cash flow projections. You need to be realistic in your approach. And in order to apply for these programs or not, you should be assessing your cash flow needs and a period of 6 months to 12 months, and also just continuously revise those accordingly. I'm going to pass it over to Jennifer now.
Thanks, Amanda. Good afternoon, everyone. I'm going to discuss the tax filing and payment extensions and highlight what we know about the Canada Emergency Commercial Rent Assistance Program, as well as discuss tax planning considerations that can be implemented to enhance your cash flow. So specifically for tax filings, the deadline for individuals is now June 1st, and that was extended from the normal deadline of April 30th. And this filing extension to June 1st would also include any foreign reporting forms you might have, elections, any designations, and even responses to CRA information requests if you've received those recently. And for those of you that have corporations, the tax filing deadline has been extended to June 1st, 2020, specifically for returns that would have been due between the period of March 18th and June 1st. So if you don't fall into that period, the normal 6-month deadline will apply. In terms of deadlines as they pertain to tax payments, the government is allowing businesses, individuals, and trusts to defer your income tax payments until September 1st, 2020. So that's going to provide some cash flow relief for you. So essentially, what that means is any income tax payments that you have that have become due, taxes as well as installments, on or after March 18th, you are now not required to make those payments until September 1st, and you will not be charged interest and penalties until after that date. For those corporations then, in terms of the tax deferral, it only applies to Part 1 tax, which is essentially that tax that's incurred in general for as a result of business income, and would not apply to tax on taxable dividends that are received by private corporations. So if you've got investments in your corporations, the tax on those investments may not be, they may not fall into this deferral. So I would recommend that you reach out to your tax advisor just to ensure that you're aware of what amounts would be under this deferral. Now, in terms of extensions around sales tax, with respect to GST, HST, and QST returns that are filed after March 27th, all payments that were due have been extended to June 30th. Next slide, please. CRA announced that no filing penalties will apply if returns are filed late, as long as they are filed by June 30th. For BC PST, filing and payment is deferred until September 30th for filings with due dates after March 23rd and before September 30th. And then for Manitoba, the April and May deadlines for RST for small businesses that have monthly remittances less than or equal to 10,000 have been deferred to June 22nd. And Saskatchewan businesses who were unable to remit their PST due to cash flow concerns will have a 3-month relief from penalty and interest charges. Now, despite the tax filing payment extensions, we would suggest getting your returns filed as soon as possible, particularly where you are in a refund position, to get access to those funds sooner. And as Amanda mentioned as well, we strongly recommend that you create a cash flow plan to ensure that cash is available to make those future tax payments that are currently being deferred, since GST, HST payments, for example, will be coming due in June now. So that needs to be planned for. And another recommendation we have for GST, HST registrants is that you might want to consider changing to a monthly filing frequency. In a situation where you've got upcoming significant capital investments, you might want to consider changing to monthly in order to speed up the refund of those claims. So those are some considerations to think about that can help with your cash flow. Now I'm going to switch things up and talk a bit about the Canada Emergency Commercial Rent Assistance Program. Fairly new program introduced to provide loans, including forgivable loans, to commercial property owners. Now, CMHC will be administering these loans, and they're going to cover 50% of the gross rents that are owed by eligible small business tenants during a 3-month period, being April, May, and June 2020. The loans will be forgivable if the property owner agrees to reduce its rent by at least 75% under a rent forgiveness agreement for that 3-month period. And the commercial property owner must have had to have declared rental income on their tax return for tax years 2018 and or 2019. As part of being eligible for this program, you have to have an eligible small business tenant. And there's some pretty strict guidelines as to what that means. So to be an eligible small business tenant, you have to have paid no more than $50,000 in monthly gross rent per location. You can't have generated any more than $20 million in gross annual revenues, and that's calculated on a consolidated basis. And you've had to have temporarily ceased your operations or have experienced at least a 70% decline in pre-COVID-19 revenues. So quite a bit of work there for the commercial property owner. It is their responsibility to participate in the program. So for tenants, if their property owner decides not to participate, it's really out of their hands. And we do recognize that a lot of these strict qualifications may not work for a lot of property owners out there, and you won't be eligible for it. So hopefully, as we've seen with the wage subsidies, information and qualification criteria seems to be changing regularly. So more details expected to come on this program, and also we're still waiting to hear on how the funds will be dispersed and how to apply. So expecting more to come on that very shortly. I'm going to switch gears a little bit now and speak at a very high level on a few strategies from a tax perspective that can be taken now in order to minimize taxes, as well as enhance the overall cash flow for your business. So number one, consider transferring past corporate installments overpayments to payroll. So if you've estimated that your corporate taxes will be lower because you've experienced a decline in revenue during these difficult times, you may have overpaid in corporate tax installments, and you might want to recalculate those or consider transferring them to your payroll account, because that account continues to be due and payable. And capital loss planning, if you've got an investment portfolio, you might have seen a decline in those, and you might want to consider triggering some capital losses and carrying those back where you've had capital gains in the past, and you can recoup that prior tax paid. Before triggering any capital losses, you want to be mindful of the superficial loss rules and the impact that the capital losses can have on your capital dividend account. So strongly recommend that you reach out to your tax advisor before going ahead and triggering any losses to ensure that you understand the impact that it could have based on your particular circumstances. And finally, I want to touch on considering an estate plan or an estate straw when the business value has declined. So what that means is this strategy ultimately is ideal to implement when the value of the business is at a low, and it can really minimize your estate tax liability and also preserve your future cash flow for your estate. With the impacts of COVID it's had on many businesses, including the real estate and construction industry, this would really be an opportunistic time to take a look at the value of your business and consider implementing an estate freeze. And then for those that have undergone an estate freeze, we would suggest looking at the value of your company, and if it's gone down, we would suggest refreezing it. And as I suggested earlier, before undertaking any of these types of planning strategies, we would advise that you speak to your tax advisor, and obviously we'd be happy to go over these strategies in a lot more detail if you wanted to reach out to us after the webinar. I'm going to pass it over to Erica for the question period.
Thanks, Jen. Thank you to all of the video presenters for all of the information. We did have some audience questions that have been coming in during the webinar. We'll try to get to a couple here before the time runs out. So the first question that I see here, I'm going to direct to Amanda. Amanda, are companies able to access multiple sources of funds, such as loans, low interest BDC loans, and is there a limit on claiming one or both?
Thanks, Erica. Yeah, so companies can go and apply to each of the loans that are offered through the VCAP. They're not restricted to applying to one and then not the others. There's some natural things in place here in terms of the sizes. So if you're a micro business, the CEBA is probably the one that's most applicable to you. If you're, needing some more additional funds, you can look at something that's direct from BDC. And of course, with the co-lending and guarantee for that 6.25 million, you can apply to each of those programs. So there's really no restrictions. It's just restricted in terms of the eligibility requirements. But if you meet those, you can apply to all.
Perfect, thank you. The next one, Justin, I'm going to pass to you. An audience question here was, do dividends qualify for the CEWS?
Yeah, we do. We get that up on a lot, but unfortunately they don't. Dividends don't qualify. There's actually even a clarifying example on the CRA website that specifically indicates that unfortunately they don't qualify for the CEWS.
Okay, thank you. Hali, I'm going to pass this to you. Do we have to issue ROEs for employees that are applying to the CERB program?
Yeah, Erica, that's a great question, and it's one we get often as well. So as far as the technicalities of the employee actually having to produce that to apply, the answer is no. They don't need the ROE to apply to the CERB. They need their social insurance number, like I mentioned, and some personal information, and then they have to answer some eligibility questions. However, we've always encouraged employers to issue ROEs just like they would in normal circumstances whenever there's an interruption in earnings. And maybe Justin, you'll want to comment on this as well. There could be some confusion though now if people are going to be rehiring employees in order to qualify for the CEWS. Issued an ROE, I'm assuming there's going to have to be an amendment because then now they're going to show that there is an interruption in earnings. So the ROE question is a bit tricky.
Yeah, and I think actually if you, on the government's website, there's more. There seems to be more and more examples on the interaction with the CEWS and the CERB, and actually in one of the cases it actually specifically says more examples to come. The one question that I always seem to get is, so it's clear that you can retroactively hire an employee to qualify for the wage subsidy. So that would impact right now. So right now it's May, whatever the date today is, May 7th, I think it is. I'm losing track of the days, but that's fine. May 7th today. So the first eligible period expired a few weeks ago. So if you haven't already applied for period 1, you could consider retroactively paying your employees for the remainder of period 1. That would effectively mean you're kind of rehiring them. And then you have to pay this amount, right? So today's May 7th. I'm going to make the decision today to retroactively hire them. That might not go on. They may not receive that pay until June 1st. So the amount is paid in respect of, let's just say, the last 2 weeks in period 1. It's not paid until June 1st. That means I can't actually apply for the wage subsidy for period 1 until June 1st because the money has to be paid to these employees. Now, the question that I seem to always get is, okay, what if I just want to do that for period 1? Because I've already paid wages for, let's just say, 2 weeks, and I want to retroactively hire somebody for only 2 weeks just to qualify for the wage subsidy. I don't think that specific example is 100% clear yet. I mean, it appears that that would be okay by the legislation, but if you're going to do something like that, the other consideration we always recommend here is definitely consulting with a labor lawyer just to make sure you're not falling into any of the constructive dismissal areas, you know, in terms of hiring or rehiring employees. So you want to be very careful there. And two things, like the CEWS is an employer issue. So the CEWS is an employer issue, meaning that you can apply for the CEWS, again, as long as that specific employee was not without remuneration for 14 or more consecutive days. The CERB's really not your issue as an employer. The CERB is the employee's issue. And Hali gave some really great examples on repayment of the CERB. And I know there's going to be a tremendous amount of confusion on this, but I think kind of logically it kind of makes sense, right? You can receive one, but generally not the other. And if you received the CERB, you have to repay it by the end of December because the CERB is taxable just like the CEWS benefit is. So a lot of interaction and probably a little bit more to come on some of the examples that we'll see.
Thanks, Justin. I have another one I'm going to throw right to you that just came in from the audience. We received a large holdback payment last March 2019. Are we able to consider something like this when looking at revenues for CEWS?
Yeah, so that's an awesome question in the construction industry. So two issues there. You've got to be very careful on the construction side in terms of your month-to-month revenues, right? Because a lot of times, like, you know, do you make your monthly adjustments in terms of like percentage of completion and holdbacks, right? Like, so, you know, you've got to look at how do you normally bill a holdback? Like how do you normally treat holdbacks for accounting. And although like a lot of us on the call, maybe more on the tax side of things, in a lot of cases when you're looking at your revenue, this is actually an accounting question. So you want to be really, really certain in terms of you're following your normal accounting practice for recognizing revenue. I can't stress that enough, especially in the construction industry, because very, very, very easy to fall offside. Now with holdbacks, because what I'm finding in some construction cases is, well, if I'm looking at, my accrual method, maybe I don't qualify, or maybe I do qualify because I just have less jobs going on. That's another way you can back into it. But if you're thinking about a holdback payment, that generally should be more of an issue when you're looking at calculating your revenues on the cash method, right? So if it's May now and I received a large holdback in May, right, and I'm looking at the cash method, well, cash in the door is going to be considered revenue, so that's going to affect my May revenues, right? So you've got to be very, very, very careful how you're calculating your revenue. You've got to be almost certain that you meet the decline from March to March, April to April, or May to May, or again, March to the average of January and February 2020. So I mean, I can't stress enough. I think there's a tremendous amount of strategy and a tremendous amount of risk with this. Didn't really mention it here because again, we're trying to go more in depth, but tremendous amount of penalties and risk if you apply for the subsidy and you're not eligible, right? Up to a 25% penalty. If you're fraudulent, jail time. And there's also the name and shame provision, meaning if you apply for the subsidy, they have the ability, the CRA, to publish every company's name who applied for the subsidy. So from a moral perspective, even, I've gotten that question a lot, believe it or not, should I be applying for the subsidy, right? I'm up over the year in revenues, but hey, if I look at the cash method, I actually qualify. What should I do? And, some very interesting questions there, but you want to be very, very cognizant of how you're calculating your revenues and some of these penalties before you apply.
Perfect, thank you, Justin. So I think we're going to leave it at that with the question and answer, just in the interest and respect of everyone's time. I'm going to pass it back over to Kenny right now for the closing remarks.
Thank you, Erica. Thank you to Team BDO for your expert and valuable insight. Our sincere thanks also to John Barksdale, President and CEO of Barksdale Construction, for sponsoring today's webinar. We will have the presentation today actually recorded and sent as well, and it will be up on the CCA website as well for review if you need to go back and review it again. Our 8th webinar on the series will be next Thursday, May 14, 2 p.m. Eastern Daylight Time, on building a comprehensive project continuity plan, which will be with KPMG in Canada. We look forward to having you then. Thank you once again for joining us today, and enjoy the rest of your day. Thank you so much.